Oil to go to $175 in the next 5 years. The oil supply crunch will send oil to $175 a barrel by 2016, a 250% increase from today's prices hovering around $70 a barrel according to Deutsche Bank's new report, The Peak Oil Market. Wall Street Journal, October 5, 2009. As of 2011, many analysts think those projections are to be even higher. The oil supply crunch, to hit in 5 years with prices skyrocketing. A shortage of oil to bring higher oil prices. The next crisis: prepare for peak oil. Wall Street Journal, February 11, 2010. Providing energy today, for a sustainable and secure tomorrow. Westmont Resources Incorporated is an independent oil and gas exploration and development company, focused on wringing value from long-lived, low-risk natural gas and oil properties. Current Westmont Resources Incorporated operations are centered on taking existing properties from others and creating more value from them for their shareholders. Westmont Resources specialize in applying cutting-edge technology to squeeze more oil out of mature basins. It's their core competence. Currently, Westmont are focusing our efforts on the emerging Marcellus and Chattanooga shale play in the Appalachian Basin, and in the vicinity of other major oil company discovery wells. Westmont Resources Corporation is an independent oil and gas producer. The company's strategy is twofold. First, to grow rapidly through the acquisition or roll-up of undervalued oil and gas properties with proven reserves in heavy oil and oil shale which have not been fully developed. Second, through the use of proprietary disruptive technologies, the company wrings out the untapped value of the target property's reserves. The company's growth plans are in modular steps depending on the availability of capital. The company's oil and gas extraction technology Eco-Recovery 4 process, which is multi-patent protected, yields a quadruple play in competitive advantages, which further differentiates Westmont from other producers. First, Eco-Recovery 4 dramatically increases the oil's viscosity, increasing yields by up to 90%. Second, because Eco-Recovery 4 utilizes a well's own gas production, it yields cost advantages of up to 50%. Third, Eco-Recovery 4 has the advantage of extracting up to 90% of a basin's reserves versus a 40% recovery when employing other extraction method. Fourth, as Eco-Recovery 4 has virtually no adverse environmental impact, the application has the potential for more universal acceptance and negates the costs of environmental damage mitigation, which furthers its economic advantages. Eco-Recovery 4 is designed to extract oil from formations such as tar sands, oil sands and shale with a calculated recovery of 90% or more. The process mechanically injects a heated solution of natural gas, derived from the production of the well, delivered deep into the formation by a proprietary tool that melts the heavy tar oil and shale oil to a thin viscosity and then extracts it to heated storage tanks on the surface. The technology is readily adaptable to traditional oil and gas extraction systems as well as shale fracturing systems. Contrary to other methods, Eco-Recovery 4 includes constant control and fracturing with no paraffin accumulation, a cost-effective extraction method with substantially lower entry and production costs enabling higher margins and longer lives for capital equipment. Eco-Recovery 4 maximizes reserve recoveries due to its ability to penetrate further into the formation at a higher constant operator controllable temperature, all of which are not possible with the most commonly applied extraction methods. All the while Eco-Recovery 4 provides a net neutral environmental impact. Eco-Recovery 4 is proving to be an environmentally safer solution with no contamination of formation or blocking of production. This is particularly of interest in the more confined and populous regions of the Marcellus and Chattanooga shale basins, which are advantageously in close proximity to the major gas and oil markets in the Northeast United States. 167 wells for the price of one. roughly costs to drill one new well are $5 million. With a 60% success rate, that brings the cost of one new exploratory well to $8.3 million. Investing the same capital in the redrilling of existing Appalachian wells that are known to produce oil and natural gas yields 167 wells. This means much lower start-up costs, much less risk and a quicker route to profitability. Technology, developed since these wells were abandoned, now indicates significantly more reserves exist and enables extraction. The company expects to successfully outmaneuver others to secure the most desirable available leases. It is a niche market that, through their industry contacts, business relationships, extensive research, study and planning, they are uniquely positioned for success. The two senior-most executives of the company have both cut their industry teeth in the heart of the Marcellus Basin. They have extensive regional industry contacts and intimate knowledge of the unique local business culture. This is a decided advantage in identifying and securing leases of existing wells with high-yield oil and gas prospects. Instead of competing with the big boys, become an attractive acquisition target. While the company's focus is to roll up the low-hanging lease fruits below and beyond the radar of the majors, they equally have concluded that, once they meet critical mass, their most likely exit strategy will be a major. That's where the company sees an opportunity to profit. Instead of trying to compete with the major oil companies head-on, they plan to position the company as an acquisition candidate when the timing is right for both parties. Simultaneously, the major oil companies offer a profitable exit strategy for investors. A number of companies have successfully followed this strategy of buying up leases too small for the majors. These are then aggregated into a larger rolled-up pool, with the resulting pool sold to the majors at a significantly higher multiple, and at a significantly higher profit. Early on in Phase 3, the first 24 months, the company expects to produce approximately 6 barrels of oil and 75,000 cubic feet of natural gas each day from each of its 92 wells. The result is 550 barrels of oil and 300 barrels of oil equivalent in natural gas for a per-day total of 850 barrels. Using the common industry valuation of $50,000 per running barrel, the total of 850 running barrels yields a valuation of $42.5 million in the first 2 years. While these are very conservative figures, the profits are significant. Consider that several major oil companies have done test drillings on land featuring the same geological structure within a quarter mile of the company's lease holdings. These test wells are producing, on average, 22 barrels of oil and 300,000 cubic feet of natural gas per day. Bruce Fisher, Ph.D. Chairman/CEO. Dr. Fisher is a proven team leader with over 15 years' experience in business development and project management, with particular emphasis on environmental, agroforestry, land development, and risk assessments. Experience includes business development, supervisory skills, training program development, and expert witness services. Bruce has founded and managed several businesses in a wide range of industries, from cruise lines to environment remediation and agricultural land development firms. As the managing director of Westmont Resources, his responsibilities include the strategic focus and overall management of the company and its subsidiary divisions. Dr. Fisher began his oil and gas career as an investor, and quickly established the necessary connections and expertise to make Westmont Resources a success. Through this experience, he has acquired extensive knowledge and hands-on industry experience in evaluation, acquisition, drilling, logging, testing, completing and workover issues. Bruce has a vast expertise in geological software and hardware designs through TerraSolve Laboratory SA, an international computer modeling organization for analysis of seismic and geophysical data. Dr. Fisher has extensive international business experience and is currently on the board of directors of 4 international and publicly traded companies. Bruce holds a PhD in environmental engineering as well as advanced degrees in geology and accounting. Glenn McQuiston, Director/President. Mr. McQuiston is the CEO and founder of 2 luxury cruise companies, Resort Society and Expedition Leaders. He also founded Get2 Networks, a company that develops and implements complete digital communication initiatives, expanding the reach of enterprises in the oil and gas, energy, transportation and financial services industries. Previously as president, Glenn headed up Baldwin Trading Company, a transporter of petroleum products and coal, throughout the intracoastal waterways for the major oil and gas and energy companies and utilities. In addition, as the president of Society Expeditions, Glenn planned and executed a turnaround strategy, leading it to become the premier destination cruise company. He has also served in executive capacities in finance at American Expressway International Banking Corporation and law, where he supported and provided services to the oil, gas and energy sectors. Mr. McQuiston has led businesses to profitability through cycles of disruption, growth, and stability, by integrating technology and human resources to maximize the return on available resources. An active forward-thinking turnaround strategist, he has rebuilt and led teams to record levels of performance and has an extensive and varied experience in the oil and gas, energy and utility sectors. Glenn has guided the development, marketing and sales of high-growth enterprises in the U.S., Europe and Asia. Through his leadership, companies he has led have effectively integrated speed, connectivity and value in all product offerings and developed new sources of business to ensure reduced customer acquisition costs and increase yields, revenues and profits. His methods have since been universally adopted by the cruise, transportation and shipping industries. Glenn has earned postgraduate degrees with high honors in both business and law. Marcy Corbin, Director/CFO. Ms. Corbin is a member of the Westmont Resources Incorporated Board of Directors and a member of the executive management team. She also has group accountability for U.S. and integrated supply and trading activities. Marcy is a graduate of the London School of Economics. Ms. Corbin joined the Avalon Group Limited in 1999, and in 2003, became Director of Finance for the Avalon Group Limited. Prior to joining the Avalon Group, Ms. Corbin was Group Chief of Staff for Quantum Financial Equity Group, with responsibility for a number of corporate areas, including strategy, technology, IT, investor relations and investments. Following the merger of Quantum Financial Equity Group with the Dagby Group, in 1997 she was appointed Executive Vice President. See the latest news headlines at www.westmontresources.com/news.html. Investor overview page located at www.westmontresources.com/investor_overview.html has current information on share structure, information and SEC filings. You can contact Westmont Resources at WMNS Headquarters, 155 108th Avenue NE, Suite 150, Bellevue, Washington, 98004. Or the WMNS Regional Office, 509 3rd Street, Monessen, Pennsylvania, 15062. Email, info@westmontresources.com. Call, toll-free 1-888-264-2738, telephone 1-206-922-2203. The fax number is 1-425-491-2838. You may also visit the website for more information at www.westmontresources.com.